video, we look at how to avoid the 60% tax trap. You might be paying 60% tax without even knowing it, because this comes into force between £100,000 and £125,000 salary. Hi, I'm Ross Jenkins, the Finance Director, who breaks down UK money topics that make it easy to understand. So today we're going to look into the weirdest part of the UK tax system, which is a 60% tax trap. So what is a 60% tax trap? Everybody in the UK gets £12,570 personal allowance. But if you earn over £100,000, the government takes away £1 of this allowance for every £2 you make over it. So this turns the £100,000 to £125,000 salary bracket into a 60% tax bracket, even though the HMRC never lists this as one. So let's look at this as an example. So if you make £110,000, the government will take away £5,000 of your allowance. So this actually means that you're paying tax on the 10k over the 100k plus an extra 5k allowance you lose, and this is how the 60% tax bracket comes about. So why do people not realise that they're paying this? It's because on your payslip it just looks like normal tax going through. The government doesn't list it as a different tax bracket, so you're none the wiser. All you know is that actually you're earning quite a bit of extra money, but your actual take-home pay is not as much as you should be expecting. So how can you avoid the 60% tax trap? Let's look at some different examples of how to get away with paying only the normal higher rate tax bracket. So one of the best ways is, as per my last video, pension contributions. So if you're over the 100k tax bracket, you just invest extra into your pension, and this brings you back under the 100k tax bracket. So that means you automatically save the 60% tax you would have paid in that next tax bracket. So this means that actually when you would have only got 40% take-home pay, you actually get 100% of your pay invested in your pension. So this also helps you achieve your long-term goals of a comfortable retirement, which I will look at in future videos. What do I need for my retirement? So as mentioned, if you actually do via salary sacrifice, this is even easier because it means you've saved NI currently on your contributions, but also the government works out your tax as and when you invest into your pension. So there's no need to do self-assessment tax returns at the end of the year because it's automatically sorted out through your payroll, which makes this a very easy method to do each year. So an unknown method that most people don't know about is gift aid. So most people give to charity, whether it's sponsoring someone doing a special event, and then you give gift aid on your donations. But the thing you don't know is actually you can use this to increase your tax band from 12,570 for whatever you've contributed. So this means that actually you can extend your 100k tax bracket up even further by the amount of contributions you make. So if you're actually making, say, £5,000 charitable donations each year, then you can actually turn this into 17,570, which is a very useful method, especially if you're already given to charity anyway. So if you get bonuses or a regular income per year, you might be able to speak to your boss and actually put these kind of increases in your salary into different tax years, which means then you can manage how much tax you pay each year. Or the alternative is you can also invest that into your pension, which also keeps you down below the certain bracket. So this is what I like to do each year. I like to put my bonus into my pension each year, so I make sure I'm saving for my retirement. So what have you learned in this video? That actually you're not trying to avoid tax, you're just trying to save more of your money and keep it for future years. So this is a very weird part of the UK tax system, and you're just making sure that you keep more of your money for the future. So this is one of the most beneficial ways to manage your money and make sure you're not paying 60% tax unless you need to. So if you found this video useful, please hit subscribe and like the video, and look out for future videos in this series. Please let me know in the comments below if you would like any details on salary sacrifice versus normal pension contributions and how you avoid the 100k tax bracket. See you next time on Money and Life with Ross Jenkins.